Thanks everybody for coming or for watching, for hanging out with us on the first Payments Dialogue. This is a new little thing that we're doing at Spreedly, just to go and cover some different topics, some more on the business side, some more on the technical side. And we've spent so much time here at Spreedly learning a bunch of things the hard way about payments. We've spent a lot of time meeting other people who know all kinds of interesting things about payments, trying to figure out how to share different things. And so we want to welcome you here. I've got David Goodale here with me, and he's going to be talking with us about tokenization. But first, just a quick intro of myself. My name is Nathaniel Talbot, and in addition to being your host here on the Payments Dialogue, I'm the CTO here at Spreedly. As I tell engineers a lot of times in our hiring process, I don't do a lot of coding anymore, but there's a lot of code in our code base here at Spreedly that is my fault, and I'm sorry. Anyhow, it's really fun to get on and talk about payment stuff and surface some different things. So I've got, again, David Goodale here with me today to talk about tokenization. And David, I'll give you a chance to introduce yourself and kind of where you're coming from.
Perfect. Thanks, Nathaniel, for having me. So my name's David Goodale. I'm the CEO of merchantaccounts.ca. It's a payments company that I launched about 18 years ago in Canada, which in e-commerce years is a pretty long time. My expertise really falling into that very early days of e-commerce is specifically in online payments, and even with that, a lot of international and multi-currency transaction processing, which means I run into a lot of different use cases for a lot of different merchants, and tokenization is obviously one of those that I run into from time to time. And so, yeah, I've been doing it for quite a long time, and I'm kind of excited to talk through this with you today.
Yeah. So what I'm particularly excited about today with talking about tokenization is, Spreedly obviously being tokenization being so central to what we do. I've been buried in it now for 7+ years, and I'm really excited to get kind of your take on a lot of these topics and how you describe it and hear how you talk about some of these different things. So I just want to kind of jump right in here. And first of all, just kind of say, so David, what is a card token? When we talk about tokenization, we talk about card tokenization. What is that? How does it work? What's your take, and how do you explain that to folks?
Tokenization is really, it's all about not having something in a way, right? A token is not a credit card number. So it's all about, if you're a business owner and you want to process a payment, or you're interacting with a customer in some sort of way. Just to start with our example, let's talk about recurring payments. It's not the limit of tokenization, but it's a great starting point for the discussion. So if you have a business and you're billing someone every month, great example is a web host, right? You don't want to store the credit card number, because as soon as you touch credit card numbers, they get into your system, it expands your PCI compliance scope, which we'll probably get into later in the discussion. So at a high level, a token is simply a reference number back to a credit card where someone else is dealing with the headache. It's your service provider that's holding on to the card number, and you just reference that card number by referring to a token.
Right. So you talked about the recurring case, which is really interesting because Spreedly actually started out as a recurring payments company and kind of shifted over to building payments infrastructure. What other use cases do you find commonly come up for tokenization?
Well, everyone automatically thinks about recurring billing. That's where your head goes right away. But it's funny how many businesses, have clients, have a list of clients that purchase from, this is totally outside the topic, but acquiring a customer in many industries is super expensive. Mm-hmm. So once you acquire a customer, hopefully they're a recurring source of revenue. That may not be a recurring payment, may not be a gym membership every month, but it could be something where you're interacting with them quite frequently. Mm-hmm. The easiest example that I could probably give that everyone's going to know is Amazon. Everyone has an Amazon account, and you don't type your credit card number in every time you run that sale. And most likely Amazon's tokenizing that data, so it's not sitting on their public server, right? So that's it. But let me take it way down from the huge example and give you more of so a good example of one that you might not think of is a garbage company. That's about as low tech as you're going to go, right?
Yeah.
That's the direction of Amazon. So garbage company, you might have a route and you're picking up garbage for local restaurants in a city area. Every month, there's more or less tonnage. So you have to change the amount you invoice them. Not a recurring payment, but when you want to get paid, a lot of businesses in, like more traditional businesses, cash flow is an issue. So when you invoice out, you got to wait for them to get motivated to write a check and put it in an envelope and mail it to you. So it's better if you can store that card on file via a token. You can go back and bill that token automatically, and you just arrange it with the customer that you're allowed to bill their credit card every month. So that's a great or more traditional use of tokenization.
Mm-hmm. No, that's a great example. So we touched on you touched on PCI, and the one that particularly comes into play is the DSS, PCI DSS. So people hear that term, data security standard. So talk a little bit more about how tokenization and PCI DSS interact, and why those two things are so closely linked.
Okay, so as a business, the first thing we can make as a starting point is PCI is hard. It's actually really pretty hard to get through, especially there's different tiers of PCI compliance. And as you get to the higher tiers, like if you go back to the Amazon example, like Amazon does a lot of transactions, so their level of compliance is going to be hard. But even as a small business, let's say you're processing $50,000 a month in credit card sales, okay? If those credit card numbers are sticking around on your system or basically touching your systems in any way, you get pulled into scope, right? And it's hard to deal with.
So to dive in a little bit more, what do you mean by scope? So talk a little bit more about what we mean when we say scope expands.
Okay, so there were originally 4 tiers of PCI compliance, tier 1, 2, 3, and 4. What Visa and MasterCard did is they kind of, or the PCI Council, I guess I should say, they addressed the fact that, this is really hard for people to get through. And sometimes people don't touch cards themselves, for example, if they're using a tokenization service provider. And in these cases, it should reasonably be easier for them to certify compliance. So when we talk about reducing the scope, there's what's called a simplified version of the PCI compliance questionnaire. It's SQA, Self-Assessment Questionnaire A. The questions are shorter and they're easier. They basically, summarized in English, they're like, don't look at me, I don't touch card numbers.
Right.
That's basically what they say. And if you can't do that as a small business, like sometimes it's just not achievable. If you have a shared web host, and here's just an example, if you did have a shared web host and you don't have control over the server environment, and there's some sort of, and I'm just making something up here, but maybe there's like a Apache update that has a vulnerability attached to it, it means while you're failing your PCI scan, you need to get it patched, and you can't because it's not your server, it's a shared environment. Right. Although that was a little bit of a bad example because we were talking about the questionnaire and I just flopped over to the scan. So I'm going to explain for a second. PCI is 2 things. The first part's a questionnaire. It's a list of best practices that merchants have to certify to. Yes, I do this and this and this and this and this. You basically have to answer every question. Yes, I do this. And if you don't, you fail. The second part, once you deal with the questionnaire, is the technical part of it, which is where you use an approved scanning vendor. This is a company that basically tries to hack your web server in a very friendly and cooperative way because they search for vulnerabilities so that you can fix them so nobody else can take advantage of them. And that's another issue with tokenization is, again, if the credit card numbers aren't on your server, you get to skip the PCI scan as well. So you can have shared web hosting if you don't have any card data on your system, which means there's a lower cost for small businesses, that type of thing.
Yep. And then I'll also highlight, because here at Spreedly, of course, we do a lot of credit card volume. And if you start doing enough, you get to have an audit. Like you get to pay auditors to come in and
that's right.
Pay them lots of money to come in and basically go over everything with a fine tooth comb. So
that's the hardest tier of PCI that we were talking about. That's tier.
Oh, go on. It's tier 1, yeah, L1. They also call it.
That's it. Yeah.
Yep. So what do you find with your clients as you're talking to them about scoping, or as they're going through these assessments, et cetera? Give me like a few examples of challenging things that they run into if they are dealing with credit cards. Like what are some requirements in PCI DSS that they often trip over?
Oh, well, you're giving me a good technical question. I haven't looked through that questionnaire in a long time. Um, I could answer it with a funny example.
Yeah, it works for me.
From memory, I had a nice lady that was selling, I can't remember, she was an elderly lady, like the type of person that would have a challenge, installing Outlook on her computer, right?
Mm-hmm.
So she logged into the TrustWave questionnaire because she was using, for her approved scanning vendor was TrustWave, and she called me and she's like, David, it's asking me questions like, is my system using industry standard port hardening techniques across all public facing ports on the server infrastructure? And it's like, if I had to ask her to format her computer, she wouldn't have been able to do it, And that's part of the issue with PCI is in a lot of ways, for a lot of regular folks, it's an unachievable standard.
Yeah.
And so if you have to get out of scope, or you have to go all in, and it means you're bringing in expertise and resource that's beyond the scale of a small business. So.
Yeah, absolutely. Let's see what else I got here. So like tokenization, we've tokenized payment method. How, like, talk a little bit through the flow of using a token. Like how would a typical business go and make use of tokenization? I mean, they're out of scope, but they still need to transact. So how does it work?
Well, let me tie this to an example. Let's go with the web host, the easy example for the first one, okay? So there's two ways to tokenize. You can either tokenize old data, like if you were a customer of mine and you had bought something 6 months ago, it depends on the payment processor, or maybe you could do this with Spreedly too. You can go back to a previous transaction and turn it into a token. I'll give you an example. So let's say that you're just buying a pair of shoes online. This is a one-time sale, nothing to do with recurring or tokens at this point. At the point of sale, you're buying the shoes, so the merchant's website says, hey, payment gateway, I have $100 sale here. The guy's name is Nathaniel. Here's his credit card number. Is he good for the $100? The payment gateway will approve it. The merchant gets the response back. We haven't talked tokens yet, right? 6 months goes by. That merchant could, depending on the system they're using, they could say, hey, payment gateway, wake up. Do you remember authorization code 23456? Every time an approval happens, there's an authorization message, right? Hey, gateway, remember authorization 23456? I want you to tokenize that now. We're going to call that token 50. And anytime in the future I ever talk to you about token 50, I'm talking about the card associated with that transaction. So that's one way of retrieving old data and building a token out of it, okay? There's a second option. A second option would be something more like a web host or Netflix or something like that, where they know right away it's going to be a recurring billing type situation, or it doesn't even have to be recurring billing. They just know that there are going to be subsequent transactions and they want to create a token. So then you would do what's called a $0 verify request. Just for the sake of explaining it to folks, they may not know what a pre-authorization is. It's like when you go to a hotel and you give them your credit card and they put like a temporary hold on the funds.
Right.
You're a rock and roll person, you trash the room with a party or something like that. That's just a temporary hold on your card. You can't go and spend that money until the hotel releases it, or until an amount of time passes where the card issuer requires it to be released. Now, what ends up happening in this situation is, because you're creating a token, you don't want to hold $500. You just want to hold zero. You really just want to make sure it's a valid card.
Right.
So that's what a verify request is. And I think this was changed relatively recently by memory. You can't hold me to this, but I'm pretty sure that the card schemes changed it so that people stopped doing like $1 pre-authorizations or full value pre-authorizations where it was really just for the intent and purpose of creating a token.
Yeah, they introduced some penalties basically if you to try to incent the downstream payment gateways and such to support what's called a $0 authorization for verifying these cards. So now they have to basically charge you or eat the cost if they don't allow you to do a $0 authorization. But we still find at Spreedly that a bunch of them still require you to do a $1 authorization, and we try to smooth all that out. But yeah, it's.
I can see where I'll bet you that came from the rise of debit cards, like Visa,
Yes.
MasterCard, because then you're not pre-authorizing theoretical money. You just suck people's actual money out of their account. That's not authoritative, but that's my theory on that.
Yep.
So what ends up happening is it's kind of a similar process. Hey, Gateway, here's a customer. Here's a $0 verify request. Is the card valid? Like, did the issuer authorize it? If so, let's call this one token 60. And then at that point, it's the same thing going forward. Anytime you want to build that card, it's, hey, Gateway, or Spreedly, hey, system, token 60, hit that thing up for $500 for me and tell me what happened.
Yep.
Yeah.
Yep. Let's see what else I got. So beyond, the obvious, security and compliance and benefits of using tokenization, like, are there any other benefits that you see for customers, financial or business benefits, revenue benefits, et cetera, from using tokenization?
There's two that I can think of immediately, and maybe I'll come up with more as we're chatting. But the first one we touched on a little bit is just the fact, like, you have to remember that as businesses, chasing down money is a real problem. So tokenizing, like, everyone wants to store the cards because they want to be able to bill the customer right away, but that brings in the problem of PCI. So tokenization right away, it eliminates PCI, get your money fast. And that can't, some industries it doesn't matter, but some industries it's like their lifeblood, right?
Yeah.
And they need it. Another thing, here's one that a lot of merchants have no idea about. Visa and MasterCard offer a lower interchange rate for recurring billing transactions. And in order for this to make sense to folks, I should probably give a 30-second explanation of interchange. So when a credit card processor runs a transaction, we don't get to keep the money that we process. In fact, most people don't know it's really the vast lion's share goes back to the card issuing bank. And so the word interchange, it just means cost from Visa and MasterCard to the payment processor. It's set at a regional level. So one region would be the United States, Canada would be a region, Asia Pacific is a region, UK, Europe is a region. It's set at a country level. And the other thing that's interesting for merchants to know is it's the same for all processors in that region. So I'm Canadian. So if someone works with us, merchantaccounts.ca, or if they work with Moneris or First Data, there's no cost advantages. Like, the cost is the same, and it actually fluctuates depending on the type of card. So if you have a college kid, right, and he gets his first credit card and he's excited, well, that's not going to be the same credit card that Richard Branson walks around with.
Right.
So those points cards, those fancy cards that have a lot of benefits, they cost more. And the interchange cost goes up to the payment processor when those rewards cards are used. And I'll just give one example just so the viewers have a point of reference. In Canada, a basic Visa is 1.52%. An Infinite Visa, which is a rewards card, is 1.71%. So rewards cards cost 0.19% more. So anyways, this is all framing up the point to make that there are costs when you process credit cards, and there's different pricing models in the merchant industry, but the best one is called interchange plus pricing. And that's where the payment processor clearly discloses the margin that the merchant is going to pay. Now, why does this matter with tokenization and recurring billing? Well, see where I'm going. As soon as you tokenize and you flag the transaction recurring properly, the costs go down, and they go down actually really quite a bit. And I actually wrote down on my sheet here, just for the viewer's reference. So in Canada, on a debit card, the interchange rate is reduced by 0.55%.
That's really significant.
That's huge. On a classic card, it's reduced by 0.15%. On an infinite card, it's reduced by 0.15. And on an infinite privilege, the Richard Branson type card, it's 0.5%, the cost savings. And it's similar for MasterCards. MasterCard is 0.55 for their debit, 0.22 for their core, 0.81%. That's almost 1% savings.
Yeah.
The World Card, 0.89 on the World Elite. So like, these are, put it, without boring your viewers, merchants will go to war over 5 basis points, and rightfully so. When there's like 80 on the table just by flagging a transaction properly, that's worth doing, especially if you're a big merchant.
Yeah, one way I like to talk to people about these costs is that a lot of them are correlated to the risk that the card networks like Visa and MasterCard, and that the issuing banks who issue the cards, that a lot of it's tied to what they perceive as their risk on the transaction. So if you tokenize the card and you've done previous transactions with that customer, the risk that it's fraudulent and that the customer is getting taken advantage of, or they're going to charge back, it goes down.
I agree completely. Yeah, that's a good point.
So, so that's where a lot of times tokenizing these things and maintaining a lot of tokenization is about maintaining a good relationship with customers. It's about providing a good experience to them, and that has lots of knock-on financial benefits, from the interchange to just collecting money. Well, being able to get your money. All right, so to kind of wrap up, let's just like talk me through, like, from your perspective, what are the alternatives, or what should, I guess there's kind of two sides to this, or two related questions. Like, what should businesses be considering as they look at tokenization solutions that they might be selecting? And tied into that is, like, what are the alternatives? Like, what should they be comparing it to? And what types of different options do the folks that you interact with tend to be looking at?
Well, I think the answer to that, scale comes to mind right away. There's different considerations for big or small businesses. One of the things that that comes to mind for me is data portability, because you're getting, it's like, I don't want credit cards anywhere near me. Get them away, please, which is great, until what if you need them someday?
Right.
And that's, I know Spreedly has a good data portability clause, because I've spoken about it in the past with other folks at Spreedly. If a merchant had for some reason to leave Spreedly, in a PCI and safe method, Spreedly would be happy to release that data. That's exactly the type of thing that people never care about until they need it. It's like, you don't really care about insurance until the house is on fire, right? And it's the same thing here. So that's something that I would keep in mind. If you do, so Spreedly is a great provider of tokenization, and one of the things, it's not really in the scope of this, but because people use Spreedly and tokenize, it gives them portability to other data platforms. So especially because I work with merchants that process in Canada, the US, Europe, and big merchants want redundancy. Spreedly, one integration to Spreedly gets you integrations into like many, many, many payment gateways. So like how you deploy it goes beyond just the immediate benefit of tokenization. That should probably be a consideration for any business as well.
Yeah, lock-in is definitely a big thing that we talk to, and when prospects and customers are looking at us and interacting with us, a lot of what it is around lock-in. Because I mean, when you create a token, it's typically locked into whatever platform you're using, right? They're
Right.
not portable. There is actually something called network tokenization, which we'll find someone and do a show with someone to talk about network tokenization. That's a whole nother interesting topic. But outside of that, which is fairly difficult to get access to, these tokens aren't portable. So you really want to think through what platform you're locking yourself into.
And I would give one more feedback, more at the smaller end of the scale, is if you are using tokenization, because sometimes there's gateway tokenization, whatever you're doing, the pricing model can impact your business. Like, I know some payment gateways that charge on a per token basis, right? And it doesn't sound bad, but if you're doing a $3 average ticket and there's a 10-cent token fee, it's huge. Yeah. So that's something to take you have to look at that as well. Yep,
absolutely. All right, well, thank you so much for coming on, David. Thanks for being our guinea pig on the first one of these. Really appreciate it. And we will be linking up your site and let people find you. And we look forward to getting any feedback on this as well. So if folks watching this have any specific feedback, if you have additional questions about tokenization, and or if you have other guests that you'd like to have us have come on for us to interview, definitely get in touch. We'd love to hear from you. So thanks so much.
Okay, thanks for letting me be the dry run.
Yeah, absolutely.
Okay, have a good day there.
You too.